All right, so for this problem, we're going to write a multi-step income statement. And remember that whenever you write an income statement, you also have to do your earnings per share. All right, so the other thing that you need to remember is to put a heading on your income statement, and it just needs to be the company name. And remember that the income statement is for the year ended. Or it could be the month ended, but remember it's for a period of time and not just a day. So for this problem, we're going to write a multi-step income statement. And remember that with the multi-step income statement, you also need to do an earnings per share disclosure. And so remember that an income statement is for a time period not for a single day like the balance sheet is. So the first line of our income statement is always sales revenue. And in this case, our sales revenue is $1.8 million. All right. The next line of our income statement is always cost of goods sold. And in this case, our cost of goods sold are $1.1 million. Then we have our gross profit. And to get your gross profit, you just subtract those two things, and our gross profit in this case is $700,000. All right, so then next we have all of our operating expenses. And I'm just going to abbreviate that a little bit. All right, and so from an operating expense perspective, what I would do is I would go back and look at the information that we're given and try to figure out then what's an operating expense. So we've already done sales revenue, interest revenue. Well, that's not an expense, and that's going to be an other revenue item. Gain on sale of investments is going to be an other item as well. Loss on expropriated foreign assets, event is unusual, infrequent, and material. So those things tell us that that's an extraordinary item. Remember that loss due to expropriation is always extraordinary. Cost of goods sold, we've already taken care of. Selling expenses, that is definitely an operating expense. So those go in my operating items. And it's $220,000. All right. Along with selling expenses, general and administrative. So general and admin are $50,000. Okay. So what else would we have that might be an operating expense? Well, we have these restructuring costs. So we have these restructuring costs of $150,000. And without any other information, we have to assume that those are an operating item. Most of the time, they will be. Okay? So now we've got our restructuring costs in there. All right? And unfortunately, I'm not going to be able to get this all on one. So go to another slide. And so from restructuring costs, what else do we have in our list? We have this write-off of obsolete equipment. a write-off of obsolete equipment is going to be an operating expense. And it's $30,000. Similarly, if you had a write-off of inventory due to inventory becoming obsolete, that would also be an operating expense. So that brings us to a total operating expense of $450,000, which gives us operating income of $250,000. Okay, so right after operating income then comes our other income and expense items. And so now we have to look back through our information to figure out what those might be. So remember, we had this gain on the sale of investments. That is an that is an other income item, and that was $50,000. Okay. What else do we have from an income perspective, from an other income perspective? Well, we also had this interest revenue. That is an other income item. And I put my revenues first. And you really should group your revenues and expenses together like that and do your other revenue items and then your other expense items. If you don't do that on a test, I will not take off for it as long as you get them all in the right category and your numbers look good and I can follow what you did. And then from an expense perspective, we've got interest expense. And remember that interest expense is not an operating item on your income statement, but it is an operating item on your statement of cash flows. So there's our interest expense. So this gives us our income before taxes and extraordinary item. Now, the reason I didn't say before taxes or income from continuing operations before taxes and extraordinary items is because we don't have any discontinued operations. So we don't have to say income from continuing operations. If you do, it's fine. I will not count off for that. So our income before taxes and extraordinary items now is $340,000. And again, slide. And we'll start with our next item, which is income tax expense. All right. So our income tax expense in this case, remember, is going to be, we have a 30% tax rate. Okay. And we have $340,000 of income. So income tax expense is $340,000 times 0.3, which gives us $102,000. Okay, and the way we calculated that was $340,000 times 0.3 equals $102,000. Okay, so that's our income tax expense. So now we have the next line is income before our extraordinary item. And our income before our extraordinary item now is $238,000. Okay? So now we have to look back and remember that we had that expropriation loss. That's an extraordinary item. And remember that anything that we have, either extraordinary items or discontinued operations, they appear after our income tax expense, so we show them net of taxes on our income statement. So our loss on expropriated assets net is $210,000. And the way we got that $210,000, if we look back at our $300,000, which was our loss, that $300,000 times 0.7 is 210. And that's how we get that 210,000. Okay? And so that then gives us, finally, our net income. And our net income, after all that now, is $28,000. But we're not quite done yet because we have to do our earnings per share calculations. So our basic earnings per share, okay, we have to do income before our extraordinary item. All right, and remember, the calculation for earnings per share is your income item minus preferred dividends over your shares of common stock. Okay, and so our income before extraordinary item was $238,000. So we do $238,000 over 100,000 shares, and that gives us 2.38 as our first earnings per share number. Okay? Oops. All right, and I'm going to go to another slide again. And then now we have to do our extraordinary loss. And our extraordinary loss was $210,000 over 100,000 shares. And so that's a negative $2.10 in earnings per share. And then our net income earnings per share is 28,000 over 100,000, which just gives us a grand total of 28 cents of basic earnings per share related to net income. All right, and that's all we have to do for a multi-step income statement.